Hello everyone, welcome back to our corporate action series. I'm Viraj Tharal and this is 5th episode, and today we are diving into an exciting topic, right issue. Whether you are a finance professional or investor, understanding this concept is crucial for making informed decision in the stock market. If you are new here, don't forget to check out our previous video in the series for the comprehensive understanding. So what is the right issue? In simple terms, right issue is when a company offers its existing shareholders the right to buy additional shares at a discounted price before offering them to the general public. But why do companies do this? Let's look at the reasons. So companies usually opt for the right issue to raise capital. So this capital is often used for paying off debt, expanding business operations, funding new projects or acquisition. Now, as a shareholders, here is what you need to know. When company announces a right issue, you will receive what's called right entitlement. So this gives you the chance to purchase additional shares, typically at a price lower than the current market rate. But it's optional. You can either take up the offer, sell your rights, or let them expire. Let's walk through an example. Imagine company ABC announces 1 for 4 rights issue, meaning for every 4 shares you own, you have the right to buy 1 additional share at discounted price. If the market price of the share is 100, the company might offer it to you at 80. So you can either buy the additional shares, sell your rights to other investor, or ignore the offer altogether. However, if you don't act, your ownership in the company might be diluted as more shares are being added to the market. So, should you always take up the right issue? Well, it depends upon the company's financial health and the reason for the right issue. If the company is raising fund for the expansion or new project, it might be a good opportunity. However, if it is to pay off debt, it could signal financial distress. Let's look at some of the advantages and disadvantages of the right issue. Looking at the first advantage, cost-effective fundraising. So right issues are cheaper way for companies to raise capital compared to borrowing or raising or issuing new shares to the public. So there are fewer regulatory and underwriting fees, but it is cost-effective. Second is favors existing shareholders. Since shares are offered to the existing shareholders at discount, they get direct benefit. It also helps maintain their ownership proportion in the company. Third is no new debt. So unlike loans or bond, right issue doesn't add debt to the company's balance sheet. It raises equity capital which doesn't require further or future repayment or interest expenses. Fourth is strengthens balance sheet. So by raising equity through right issue, companies can use funds to reduce their debts, thereby improving their financial stability and balance sheet health. Fifth is flexibility for shareholders. So shareholders can choose to subscribe to right issues, sell their right in the market, or let them expire. So this provides flexibility based on their financial goals. Sixth is maintains control. A right issue helps companies to raise without involving external investors, which would otherwise dilute the control of the existing shareholder. Now let's look at the disadvantage of right issue. First is dilution of share value. So when new shares are issued, the overall value of each share may reduce temporarily due to increase in the number of outstanding shares. Even though the shareholders maintain the same percentage, the share price often drops. Next is pressure on shareholders. So existing shareholders may feel pressured to invest more money to maintain their ownership percentage. So those who are unable to participate will see their shareholding diluted. Next is misallocation of funds. So if funds raised are not used efficiently, the company may face further financial trouble. So that making the right issue ineffective and hurting the shareholders' value in the long term. Next is short-term focus. A right issue is often seen as a short-term solution to the financial problem. If company frequently use right issue for fundraising, it can signal poor long-term planning. And the last one is a complex process. So right issue requires clear communication and can be a complex process to implement. So shareholders may need assistance understanding their rights and making decision within the short time frame allotted. To wrap it up, right issue can be a great opportunity, but it's important to evaluate the company's reason for raising fund and its long-term outlook. Always analyze the offer before making a decision. Thanks for watching. In the next episode of our corporate action series, we will be covering another exciting topic, stock split. Stay tuned and don't forget to subscribe for the more insight on the financial world. Until next time, this is Viraj Taral signing off. Thank you.